Hello guys, welcome to Equity Matrix. The stock market had a major sell-off yesterday on announcement of Trump's reciprocal tariffs, and things aren't looking good for the stock market. However, I'm still bullish on the market, and let's see where we go from here, or where we could possibly go from here. Now, there's a chart of the VOO, the S&P 500, a basket of the top 500 companies in America. That high that we can see is from the 19th of February, the high right at the top, around the 20th, the 19th, 20th of February this year. The S&P has been falling ever since, all the way down to its first bottom, which was around about the 13th of February. It dropped heavily, and it dropped around 10.3%. 10% drop is what we like to call a correction. In other words, losing a lot of money fast. But 10% is a garden variety. It's typical. It happens on average once a year in the stock market. So we did see a bounce once it hit that 10%, and it bounced up around about 5%. It was showing a lot of strength, and as you can see, the bottom blue line, the dark blue line, is what we call the 200-day moving average. So once we saw it break below that, we knew there was problems. But once it broke above that, investors expected that there would be a sharp rise up, which I predicted, and which there was actually a gap up from the 200-day moving average, which is around 522 on the VOO, the S&P 500, and it gapped up to around 530. So we was expecting potentially some strength, but we was very cautious of the Trump tariffs, which then played out, and it slumps the VOO all the way back down to 502. We've seen a little bit of buying from investors, and after hours yesterday from Trump's tariff announcements, the S&P dropped, as you can see, pre-market all the way down to 3.18%. So now the S&P is down. It's currently the lowest it's been since the 11th of September 2024. So it's erased all the gains that Trump gave us when he got into office. My view, when we're looking at the technicals, is if we break 496, then we could have some major problems moving forward. The uncertainty could just rock investors, and we see a continuation drop. However, the economy is not in a recession. We haven't had 2 quarters of negative GDP. Earnings for the top tech companies still look in shape. Yes, they have guided lower last quarter, but they're still in shape. Let's see what happens towards the end of April, and let's see what happens with earnings. That could be a major catalyst moving forward if earnings come in line, and if it will show that we've had a full shakeout, and we should see a rise upwards. For now, it could sell off a few more percent, and but now is a good buying opportunity if you're dollar cost averaging, and if you're investing. If you're trading, follow the levels. If it's going down, follow it down. If it's going up, follow it up. Stay tuned for more information moving forward and analysis on the markets.